All right. Hello, everybody. Welcome back to another episode of Sofi Weekly. It is Q4. It is episode 4. We are recapping Q3 earnings. Shout out to Riley. He did the Q3 earnings live stream with me. About 400 of you showed up, which was kind of wild because there's 400 people just staring at us, listening to blank audio. And then we got to analyze it. And obviously, the market reacted very nicely to Sofi, up 18% pre-market. And then 5 minutes later, we know what happened. But we're going to break down everything. We started 30 minutes earlier today, so we have an hour and 30 minutes, 90 minutes to really get deep into what happened and break down earnings and see where it's going from here. So first of all, how are you guys? How are you doing this week?
Pretty good.
Good.
Stock price.
Have you worn that shirt before in a video?
Yeah, once before.
Oh, wow.
You got to hit the likes, guys.
Guy.
Get us all super excited by hitting the like button, sharing this stream, okay? You got the Sofi guy on this own, Sofi Weekly. So get excited.
You're going to get sued.
Yeah.
Very cool. Let me see some people in the chat. We got Joy in the chat, Jason, Quarantine Quartet, Dex, Unborn, what's up? Mazda, M-Flow, a bunch of losers on a Friday night, except me. Okay, me. All right, so let's start off with this to get it started. Each of you, what were your raw reactions to earnings? And then we'll get into the specific numbers. Let's start with Tevis.
Dude, I slept in and I woke up at like 10:30, 11 in the morning. And so I was late to the party in terms of looking at the earnings numbers. Initially I baselined
such an
myself.
Understatement, by the way. You went for a walk, you ate gelato.
Yeah.
You had the time of your life during the biggest earnings season for
Yeah.
Oh my god.
You just didn't like
selling that.
You just didn't care, basically.
I took Tuesday off. And by the time I actually saw the report to start prepping a video, it was like 4 p.m. So, but look, I think I think I had baselined myself pretty high in terms of what I was expecting from the growth, and so in the members and the products section, one thing that I was really scrutinous of that I'd love to chat with you guys is that sequentially declining growth rate, because we've been seeing it now for 2 quarters in a row or something like that. The things that really surprised me was the accelerating growth in the loan segment and also just personal loans, how strong they came in, which we can talk about more in depth. I'm just laughing at your chat right now, Amit. But yeah, that's it for me.
Wait, why are all these eye emojis in the chat?
Just a couple of girl fans, I guess.
I only know one of them, so I don't know what this is. Okay.
I only know 2 of them.
Wait. This Samantha girl, you know?
Yeah, that's my wife.
Oh, okay.
No,
wait, actually, are you fucking with me? Are you serious?
No, that is my girlfriend. Yeah.
Okay. I was just like, who is that?
She's in the other room commenting.
She's a SoFi shareholder. Okay, so just want to put that out there. So.
That's a good thing. Okay. Okay. So Riley,
does she call you the SoFi guy?
Yeah, she does. Yeah.
Wait, hold on. Do you guys actually talk about SoFi in your free time ever?
Are you kidding? Of course we do. It's all I talk about. Are you kidding?
Yeah, I've lost some friends, man.
Yeah.
That's actually
okay. Sorry. Continue.
We'll move on to Riley, and actually we'll go to Tannor because Riley was doing good. Tannor, what were your raw thoughts when you saw the earnings?
Yeah, I just learned a lot. Not only was I sort of expecting a triple beat at this point, but that I was just surprised. There was a ton of information that came out that really surprised me. So I want to get into it. There's a bunch of information, even with the decelerating amount of members that are coming in. It almost seems like it's on purpose. Okay. Not even conspiracy talk. Okay. Noto brought this up on the earnings call and I have it all written for you guys. So luckily we have that extra 30 minutes because we're going to, completely cover all this. So very, very exciting.
Okay. Quickly, Riley, your raw thoughts
I liked it. I mean, of course, we did well. I can't believe just how the stock is performing after a quarter like that. When a year ago we would have just been to the moon. So I don't know. I have mixed feelings about the. I mean, like, great, the company's going well, but my net worth is down. So
It's fair. It's fair. Okay, so let's get into the numbers. Let's start off with Tannor. Whatever stat you want to focus on, we can begin with that and keep going.
Before we jump in, well, I think Riley said he wanted to show something off before we jump into the numbers.
okay, let's go ahead and do that. I'll start off and present.
He's got some pretty interesting things. I don't think any of us even know what he's about to show right now. So blow my mind.
Okay, so basically, I gathered a bunch of the news around SoFi that has nothing to do with the quarterly earnings, just so we can knock this out in the early stage. So first off, let's get this started. Well, the first off is the stock. I think most of the people watching this looked at this same picture and just kind of like talk to themselves in their head, like, what the hell? But moving on. Options there's some updates on options. So if you look at the top, 2 weeks ago in the code, options had trade options beta. It was changed to just trade options, and you could see some progression. And then as of yesterday, Vendor 9000, which is a really good guy on Reddit that goes through the code, posted a lot of stuff about options, what's in the code right now.
He works at SoFi, right? He must.
That's what I was thinking, because he's been like talking, like, if you look at his Reddit, he's been talking about SoFi like since 2019. So I don't know. Nobody knows who this guy is, but he's hands down like the best DD guy for SoFi. In any case,
seriously, for
options looks close.
If you don't know Bender 9000, he is the source of all the leaks that happen at SoFi. Like he knows everything a month before it happens. So he's actually a truly great source. Like, he's not underselling it. Go ahead.
And he's minutes. Like, as soon as something releases, he's minutes. And we're going to be seeing him a little bit more as we go through these slides. So options looks like it's getting close. We don't know when it's coming, but the code looks like they're getting prepared, because they're starting to put announcements in the code, like if they were to actually release it out.
So before you jump into that, Riley, I think Noto also mentioned in the Q3 earnings call that they were in the beta testing round as well, and that they're still on track for end of year. And I mean, end of year is like 2 months away, not even. Right, because you got to take into account the code freeze for Christmas and such. Like, you don't want to do releases during that time. So really, it's like 6 weeks.
I don't know. And the thing is, like, once they roll it out, it's not going to be all at once. It's going to take, I 100% guarantee it's going to take like at least 4 months to get it fully out. I mean, maybe better, I don't know, but we'll move on to the APY. This is pretty big news. New APY is up to 3% for savings accounts, which is amazing, and it also incentivizes SoFi users to keep money in the bank and not spend it, because it used to be just 2.5 everywhere, but now you're incentivized to save, I guess. What do y'all take?
I don't think they're increasing it as fast as they used to. You know, from the stats that we can see from the earnings call, and what Chris Lapointe is saying is that their margins are going up, and you know, the amount that they're keeping versus the cost of funding where they could do otherwise, like warehouse facilities, is a bigger margin. So I don't think it's going to be following as closely as it was before.
I have a question about this. Maybe you guys can help me with. So what's the logic behind just savings rather than savings and checkings? Is it just to incentivize longer holds? I mean, it's fairly easy to move your money around between your internal accounts. So what's the rationale there?
I think it's an outdated form of, like, I mean, the checking and savings account goes back like 50 years. So it's based on outdated types of technology, and I don't know. I really don't know.
I'm sure they're not. I'm sure this isn't irrational. You know,
Yeah.
I'm sure there's
Mhm.
some sort of data that says that the people that are using their savings product and their vault product are keeping their money in there longer, not moving it as frequently, and maybe a stickier client. So that's probably what it is that they can just know that the deposits will stay there longer and be able to be used for funding if they're able to actually, you know, have a higher incentivized amount of APY in their vault or savings products.
Good point. Okay, I'm going to move on real quick to the next news. So SoFi Plus, this is Bender showed this to me at first. He puts out SoFi Plus rollout messaging has changed from weeks to months, and this is the tweet that he linked to. So basically, what happened was, if you were to call SoFi a couple weeks ago and you talked to a rep, they would say by the end of October, SoFi Plus should have been rolled out to all members. But now the messaging has changed from weeks, like Bender has said, to months. That they're still in beta and they're going to be rolling it out in the upcoming months. So they're taking a lot slower time to roll out Plus, which maybe that's good. It doesn't necessarily mean anything's bad. They're just taking their time, which I don't know. Elon Musk takes his time with other products, so I really don't have any negative things to say about this. But that's just the SoFi Plus update as of right now. Something really new is the SoFi Relay Insights. So there is a person called Jay Palouche Jay Palouche 4 on Twitter. He got an update. I haven't got it. Nobody else I know has got it. But this is what this might be an Android. But in any case, the user interface has changed for SoFi Relay, and it looks a little bit more slick. What do y'all think of that design compared to the app now? I know only Emit has the app.
Is the dark mode a part of this as well?
Yeah. I think this is just the dark mode side, but Relay right now does have dark mode, but it's not this dark. So they're making the app even darker. So I don't know. I'm not a design person, but it looks better. It looks better.
Just
it doesn't look
accessibility,
all
I'm guessing.
blocky. Yeah. This was just released like 12 hours ago by this guy on Twitter.
But is this update public yet or no?
That's the funny thing. There hasn't been an update for like SoFi in 3 days. However, that's for Apple users anyway. So this might just be an Android thing as of right now. I'm sure somebody in the comments will say something about how they have this update or something, or after they'll check. But it just looks slicker, which is like the first time ever SoFi has ever done anything slick in a while with their app, So I guess that's a cool sign that they're doing something. But literally radio silence from the SoFi team.
Yeah. Well, it would be nice. I just want them to get rid of the lag. That's all.
Yeah, same here. All right, I'm gonna hustle through this, move on. Let's go to the future products. Bender, like Tannor said, has a wealth of knowledge, and he kind of posted a cool thing here. And if you look, it's just he's just highlighting all the products that we know that SoFi has talked about, or if there's been any documents relating to them. For those of you that can pause this video in the future, you can look through this and probably see some cool stuff. Basically,
can we address that comment, by the way, the most recent comment? The reason why I and Tevis do not have the SoFi app is because we're both from Canada. I even tried. I have a residence that I could have sent the debit card out in America, and yet, because they wanted a I don't know what you guys call it in America, like a social security number or whatever. I wasn't able to actually.
It's such a big thing in America. So the way you said it,
we have one too, but it's just not. It's not.
What do you guys call it?
Social insurance number, a SIN.
Interesting. You guys insurance, we call it security.
Yeah, but I know that it was a different version for you guys, so I don't remember. But ours is like that's your ID for the government, pretty much. But I'm sure it's the same. But I don't have one, so I can't be a SoFi member.
Okay, moving on. This is where the news for SoFi gets really, really fun. For some reason, out of nowhere, Anthony Noto just started posting a lot on Twitter, and this was after the earnings. So I assume that he was kind of radio silent, like trying to like work on stuff. And then as soon as the earnings went out, he just kind of relaxed and he was on Twitter. So there was this really interesting exchange between Alexandria Ocasio-Cortez, Elon Musk, and Anthony Noto. I'm going to read it out just because it sets up what I'm about to show you all in a minute. Laugh out loud at a billionaire earnestly trying to sell people on the idea of free speech is actually $8 per month. Oh my gosh, I can't speak. Subscription plan. And then Elon Musk says, your feedback is appreciated. Now pay $8. And then Noto
basically go fuck yourself.
Exactly. And then Noto replies with an idea of how Twitter can be monetized. And that's basically the exchange. However, people saw this and noticed it, and we're kind of talking about it on Twitter. So if you look at Investor Gadget, he goes out and says, ask Noto if SoFi could do a partnership with Twitter. Noto says if they switch their direct deposit to SoFi and paid $8 a month to Twitter Blue via SoFi account, we would refund the $8 a month to their account for 12 months. That way we can do it with the zero integration equals 1 year free from SoFi. And Elon can just market that offer to his users. So this was a really cool exchange.
So SoFi is offering to pay $96 per user. They're giving 1 year of Twitter Blue free as long as you use SoFi. That's
not yet technically.
I mean, obviously,
he's just spitballing on Twitter. But yeah, the idea is really interesting, especially since like Anthony Noto used to work at Twitter. Elon Musk is trying to make a finance app. Like everything just smells good about this.
It's going to be a SoFi Plus member benefit for sure.
Oh, that's a good point. I like that. Yeah.
And Elon needs members, man. He tweeted today that ad revenue is going down. Big advertisers like Pfizer, GM, they're pulling out. So like they need, if you give me Twitter Blue for a free, sign me up, right? Like that's a great offer.
And look, I want to build on that actually, because so I made a video on like this is one of the topics earlier today. And, I think as I've been thinking more about it, this is something that can span far beyond just Twitter. Like, yes, it does open the door for further Twitter integrations, but they could also do this with other companies in terms of diversifying their perks for SoFi Plus or for their direct deposit members. Because of that one line that he said there, it requires zero integration. In other words, Twitter doesn't really need to do anything. We're just refunding you money that you would have otherwise had to pay Twitter. And so like they can just do that for anything. Like you want a Spotify membership, cool. Netflix membership, cool. Like whatever you want, and you can have a diverse set of like pick your own perks, basically.
Yeah, not all of them at once. Pick what you use.
Exactly. But this was cool because he's actually, has his finger on the pulse of what's going on in like the zeitgeist of with this whole, Twitter acquisition, and he has that own connection there. And then the ability to very quickly turn it around and actually have something beneficial to SoFi, I think, is just the icing on the cake.
So right now we're looking at the tweet that started what I'm about to show you right after this. So Investor Gadget, props to you, man. Like this is all because of you, I guess. But shortly after this, Investor Gadget was like, you know what? He just tagged Elon Musk and Anthony Noto, and he said, solved your problem. And then look up at the top here, Anthony Noto actually retweeted this. So Anthony Noto is trying to get this in front of Elon Musk. Or it looks as though that he wants Anthony Noto wants this deal coming. Like he wants to do something with Twitter for sure. And so the
thing is, they don't even need Twitter's permission to do this, right?
But
so
I mean,
it seems like they're already going ahead with this, and Twitter hasn't really spoken up or done anything.
It sounds like, Tannor, that he just wants to get his attention so that he can open the door for something further, which is interesting because I never saw Anthony Noto tweet this much with regards to a Twitter integration when Parag was in charge.
Yeah.
Bro, I've never heard Parag say a single word on this planet. He never used Twitter.
So real quick, after this, people just started blowing Anthony Noto up, and everybody just started talking about this. So what Anthony Noto did a couple hours after that is he just says the positive response to our idea for SoFi to help you pay for the Twitter Blue was so positive we decided to do it. Hit the retweet button. And basically, SoFi ended up tweeting this. We're ending the complaints that this gets 8,888 retweets. We'll pay for your Twitter blue check when you join SoFi. And within hours, it got 1,897 retweets, which is insane for SoFi. Like that's some of the biggest user engagement. So we might not be hitting the 8,888 retweets, but we're on their radar. This is on their radar for sure, which is really cool. Let's see. Okay. And then right after this, Anthony Noto stayed up and he was just retweeting a lot of people that I know in our investor SoFi group chat. We got Cope Capital was retweeted by Anthony Noto. Also, Christian Hartman was retweeted by Anthony Noto. And then I was like, oh my gosh, Noto is taking notice of everybody. I got to make a meme and hopefully he'll retweet me. So I made this meme. To no avail, but somebody did get on the meme bandwagon and was retweeted by Noto, and that was Mike. He made this tweet, and Noto actually retweeted it, which was a lot of fun. And that's it for the whole Twitter saga. The last thing I got for you guys here this week is Magnified Money sells his SoFi position. He's kind of like a SoFi YouTuber reviewer. And
He's a SoFi YouTuber or a finance YouTuber?
He's a YouTuber. Okay, that doesn't make sense. He's a finance YouTuber that makes videos on SoFi Bank. Like, hey, he like compares other banks and whatnot. And he also is a fan of the stock, so he's lost a lot of money. And the thumbnail says negative 25,000, so we're assuming he lost 25,000. He did say that he lost tens of thousands of dollars in this video.
Did he walk through why he sold, Riley? Because I'd be interested in that case. Like if it
Well,
was just like
opportunity cost, I guess.
Yeah, he
so-
says there might be better investments out there. And to his benefit, if he is watching this, he did say he thinks that everybody's going to criticize him for making this as a bad choice.
I don't think anyone's investment decisions are, you can say good or bad, right? It's personal, but
Yeah,
the opportunity
good,
cost
yeah.
logic is interesting because Apple has made $99 billion of profit trailing 12 months and they're still down 20%. Like, I don't know where the better opportunity
Yeah.
costs are. Maybe he knows, but it's
Yeah.
hard to see.
Well,
Good
no,
point.
what I was getting at was it was just interesting because either he sold for a SoFi specific reason that he found out in the Q3 earnings, or he sold for something unrelated to SoFi. And it sounds like, he sold for the same reason that SoftBank sold, essentially.
Yeah.
Not related to the stock at all.
All right, that is it. That's all I have for y'all to this week. I think I might continue to do this.
This was
'cause that
good, Tanner.
fun.
Yeah. And
Yeah.
Riley, this was great. I didn't even
good.
know you were doing this. This is awesome. Every week. If there's enough news, then it's a great thing to do.
Yeah, there's a lot of news this week.
It was funny that you mentioned that meme that Noto retweeted because I saw a CNBC interview. I think he did 2 interviews after the Q3 earnings, one on CNBC, one on Yahoo Finance. And on the CNBC one, the host basically asked him about the checking and savings. And she was just like, I check my Chase every day and I'm getting like 0.1%. And you should see the biggest grin on his face. He's like, we're taking shares from traditional banks. So obviously he would retweet that meme.
That's hilarious.
And it's so true, though. I just saw someone recently actually just visualize this of, I think it might have even have been Steven. I think it might have been where all the deposits for all the traditional banks have all been going down in the past year, but yet SoFi has been climbing like crazy. And now some of that is probably because we were starting at ground zero and we don't have those large deposits to begin with, but also we just offer a better product. And for people that are willing to take the jump, get over here, baby. Like we people are coming. So
Chacha made a funny point on Twitter. He said, no, we didn't really have that many that much money in deposits. It was Anthony Noto just convinced the LA Rams just to put their paychecks in direct deposit with SoFi.
do you guys want to jump into some numbers and let me have my fun for a little bit?
Yeah,
let's
please
do
do.
it. Let's get into earnings.
Or not like I said, we do not have the financial statement yet, so I don't have all the fun little nitty gritty details, but just some of the ones that stuck out to me in the earnings call that maybe we can talk about let's have a little discussion around them and some key things that pointed out to me. So first, obviously the big ones. Adjusted net revenue, we now saw a new highest high, record-breaking $419 million for SoFi. This was up 51% year over year, and this was record-breaking for revenue. Sorry?
Can we put the quarterly deck, the Q3 deck, while you talk? Let me see. I'll put it up. Keep talking.
Potentially, but most of the things that I'm going to be talking about is not on the deck. So
okay.
We might be past it very, very quickly. And by the way, this is all record revenues across all three segments of our business. So just to remind everyone that's watching, because I know that like we do every single quarter, some of you guys are just from a MITS chat and may not be into SoFi just yet. You will change your mind. Okay. One is from the technology platform. This is Galileo and Technesis. Second, financial services segment. This is, having a checking and savings, investment accounts, credit cards, these sorts of things. And then lastly is the lending product. Okay. The lending products are personal loans, home loans, student loans. We saw records across the board. I know the Bears are going to say, yeah, but Galileo wasn't really a new record. It was kind of tying from last quarter. I agree. It wasn't pretty. But still records across the board. Very, very exciting. More exciting than that. And then this is where we get past the docket right after this last part. Okay. $44 million of record EBITDA. Okay. This was up 118% quarter over quarter. It took us 3 months to do more than double our EBITDA. And that for SoFi investors, we know why. It's because we went from not being a bank to being a fully chartered bank. Okay. Mm-hmm. It allows us to really, really lower the cost of our funding our loans. And that's really going to ramp up the bottom line. But that being said, this is not we're not even at the end of this. This is expected to grow even more whenever we look at Q4 and then even higher in Q1. So very, very exciting. Anyone want to say anything about that before we get into a little bit more nitty gritty details?
Yeah, it was their sixth consecutively higher quarter, which is really interesting also to see just that trend of the compounding growth. There's a lot of super nitty gritty details, but maybe we can after the high level stuff, we can jump into each segment and then because there's a lot of interesting insights there. But Amit, you were going to say something?
No, I'm good. I was going to say it. There's just someone in the chat. Someone said engage. No, someone said engage the chat room. And I'm like,
yeah. So I was looking at the chat room, and I want to say Chris says so. He keeps asking about the Technesis acquisition. It's been done since May or something, man, or March or something. So yeah, we're good.
We're good, bro. We got them. We got the job done.
Yeah.
And then 24 hours to live says, do you feel like the stock can get to $15? Maybe. No one freaking knows.
At any point?
Oh yeah, for sure.
At any point.
At any point, yeah, of course.
Yeah. The problem is that, and what I find is really hard with price predictions is where does the macro environment go? Do I think that SoFi can be so efficient and undervalued right now that they could get to $15 next year? Sure. But if we continue to get interest rate climbs after interest rate climbs and bad jobs reports that push the Fed to actually, increase these sorts of things, then maybe not. These are uncontrollable things and people are selling based on opportunity costs. And it's the whole market is, we're all facing the same issue here. And if anything, financial services companies are maybe best positioned, especially ones that have massive diversification like SoFi. I don't know what your guys' opinions are on that, but
I agree.
Yeah. All right, let's jump into some fun stuff. SoFi Bank has accelerated their growth in their deposits up from $2.7 billion of Q2. Okay, not last year, Q2, just last quarter, up to $5 billion in deposits this quarter. Okay, that's up 86% quarter over quarter. And on top of that, the amount that we're actually paying for these deposits versus our other forms of debt is now at 125 basis points cost of savings. Now, just to really dumb that down and just make that easy to understand, let's say that we're offering people 2.5% in our checking and savings, okay? And then a bank can use those deposits to fund their loans, okay? If we weren't a bank, we would have to get what's called warehouse facilities, or think of it like a corporate credit card, okay? It's a big amount of debt that we can go and dive into that we can, it has a variable rate, interest rate that we would have to pay on it. For our warehouse facilities, it's around 3.75%. So
Wow.
those deposits, if we can get, instead of 3.75, we only get 2.5, that's a 1.25% savings on all the dollars that we actually use towards our lending. Does that, everyone, that makes sense for everyone?
Yeah,
Chat,
so
blow it up.
just because we're a chartered bank, like the unit economics are just way more compelling than competitors.
Yeah. 100%. Before we wouldn't really have that option at all. And we're just in the market to
Wow.
get whatever rate that we're offered. And this is the reason why traditional banks have such low ratings, like 0.1% in their checking account, because think about the difference between warehouse facilities at 3.75% and deposits at 0.1%. Like, they are making a crap ton of money. That's why they're so profitable. But whenever you're the customer, you're getting a little bit shafted that way. And so that's why SoFi is greedy enough where they can still keep a margin. And that margin's growing, by the way. Last quarter was only 1%. Now it's 1.25%. So it's getting better over time.
What did you guys think of? Okay, maybe Riley, you go, and we can finish on this, and then, because I want to touch on the SoFi Money quote on the direct deposits by day 30.
Yeah, I got that on my list as well.
Yeah, but we
So
can get to
excited.
that.
Well, how about y'all take it? Because I was just going to throw out another question.
Yeah, so I was just going to ask, like, what do y'all make of this? So basically, Anthony Noto had this as one of the quotes in the ER, and he mentioned this in the earnings call as well, by saying, in that same vein, where total deposits grew 86% during the quarter, so from 2.7 to 5, he also mentioned that 85% of SoFi Money deposits, so this includes checking and savings, are from direct deposit members, and half, so 50%, newly funded SoFi Money accounts are setting up direct deposit by day 30 versus only 37% that did it in the second quarter. So basically, more people are setting up direct deposit by day 30. And this has a significant impact on debit spending. That was a really interesting tidbit, because I feel like a lot of people might have gleaned over that fact. And so I wanted to bring it up to see what all y'all thoughts are.
Love it.
So the rate at which people are adding direct deposits are increasing. Wow.
Yeah. So once people sign up for SoFi Money, and this is not overall, it's not 50% of people are doing direct deposit. It's 50% by day 30. Okay. That people are actually transitioning to already consider us their primary bank. Where before, just last quarter, it was 37%. That's a crazy increase. Like that's mind blowing to me. And I bet you it's going to be even higher in Q4, considering we have this 3% offering now.
It also shows that their MAUs are actually engaged, because, like, for example, if I log on to Facebook once this month, I will count as an MAU in their earnings.
Right.
So on SoFi, when they said they got 69% year-over-year growth in members, that's great. But, like, if they just downloaded the app and signed up and never did anything, it's like, yeah, you got a user, but like, so the fact that they're actually putting their money into the bank direct deposits, which gives SoFi more money to make money on lending, I mean, that's like a really nice loop.
So obviously it's very positive for SoFi, but from a user perspective, is that just a direct consequence of the APY being higher? Like, because the APY is higher, that incentivizes more people to say, hey, look, I want to be banking with SoFi as opposed to having multiple accounts, and I want my paycheck to just go into SoFi. Is that the main reason that is increasing this percentage from 37% to 50%?
What do you think about the idea that this is a direct correlation to the brand awareness of SoFi Plus? If people actually know, like, people love being a part of this club, right? And that, although, direct deposit might have already come with all those perks, or maybe you could have been in those perks without direct deposit, knowing that you actually have this barrier to entry that is technically free, although we make a ton of money off of it. For them, it's free. It's just their time and, where they need to actually cash out. But getting all those perks is like a little bit exclusive. And I think that's great for people. Just personally.
Yeah. I mean, it also, I guess it speaks to this internal motivation of wanting this one-stop shop to do stuff. I haven't gone direct deposits on SoFi yet, but I would imagine that if people are doing it, then they feel there's value in there versus Bank of America. But the yield is probably the biggest motivation.
And then, so I don't know if there's anything in the chat, because I think I'm gonna compound on this even further, because I think this was honestly, Tevis, I'd love your opinion, Riley. I felt like this was the quarter of the financial services segment. Like, this is really where we're starting to see the true power of the financial services segment. I mean, it's going out of its mind. And for the longest time, people only talked about the technology platform and lending.
Mhm.
And now the conversation is more along the lines of lending, obviously, because it's our top driver, but also, financial services cannot be slept on because it's doing really, really well. Also because it's our top of funnel product, right?
Yeah, let's go for it. There's nothing in the chat. So we can go
Nothing in the chat. Okay, so not only let's remember what everything was said. So deposits are climbing like crazy. 50% of people are also going towards direct deposit. All that news that we've already heard. Now top that onto financial services sales and marketing spend as a percentage of net revenue was 58% in Q3. Okay, which is high, but comparatively to last quarter, it was 81%. Okay, comparatively to last year, it was 105%. So just year over year, we're doing about half the cost to actually acquire these customers. And yet, the clients that we're actually getting are way better than we were previously seeing because they're actually getting, the direct deposits. So we're charging less to get these clients and we're actually, getting a better client out of it. And then obviously they're cross-selling into personal loans because we're going to talk about that growth as well, but it's gone ballistic.
Yeah, no, that's incredibly exciting, and I think the cross-selling part that you mentioned into personal loans, that's I was talking to Steven yesterday because we were doing a podcast, and the lending business is growing, and when student debt loans get personally refinanced or get refinanced along with personal, he showed a chart that says personal loans went and taking out personal loans went up during COVID, whereas student loans obviously went down. They're both going to go up in 2023 as long as like everything goes the same. So the cross-selling on that is going to be probably really good as well.
Yeah. And I'm not as excited as the average person for student loans. I mean, they are exciting, but the actual income that we can make off them, our actual margin isn't nearly as high as a personal loan. You could almost say that a personal loan is worth about 2.5 times.
What's the reason for that, Tanner?
Sorry?
What's the reason for that? Why is it worth more?
Just the interest rates that we're charging on them. So personal loans student loans right now, once the 10Q comes out, I'll give you guys exact specifics. But right now, last quarter, it was like 4% for a student loan and like 12.5% for a personal loan. That's how much our average interest earned was per loan. It's probably going to go up because obviously the rates are all going up, and that 4% is probably due to just older loans before, like back in 2020. So obviously the interest rate would be much lower, but it's not going to be nearly as much as a personal loan.
Yeah, I mean, one thing that I will say around that is you got to consider also, one of the reasons that might not be front and center around the student loan moratorium ending and them coming back. Like a lot of people are taking that at face value to say, okay, well, in a CNBC interview this week, Anthony Noto basically said that we're operating at 25% capacity. So just quick math, you can just multiply by 4 to say, okay, where would I very roughly, anchor myself for student loans? But the layer beneath that, is that cross-selling flywheel. When student loans was essentially halted back in March of 2020, the ratio of financial services products to lending products was about 1.3. Like we had a 1-to-1 parity between lending and FinServ. And fast forward 2 years later, that ratio is 4.6. So in other words, there's like 80% financial services products to 20% lending products. And so when the student loans gets turned back on, what you'll see in that productivity loop is so much higher than what it was in 2020, because during this time that student loans has been basically turned off, the infrastructure, the scaffolding has been built on the back end, so that now that it's back turned on again, there's so much more that a new person can do on the SoFi ecosystem. When they're just starting off with a student loan, they can cross-sell so much more easily.
Let's put one question up from Nate, just to play sort of a devil's advocate. Does the massive uptick in personal loans scare you? I know we have higher FICO users, but if they are really higher income, why are they taking out personal loans?
So can I actually answer this with a clip?
Yeah, go ahead.
I knew this was going to come up. And this is a clip from Anthony Noto. Let me see if I can do this correctly.
Is this the CAC comment that he makes about raising?
No, he basically talks about the reasons why personal loans is so much higher right now, and why people are taking out personal loans as a result of what's going on in the economy. So
I love it. I feel like I haven't seen this. Set it up.
Boy, I don't. Okay, hold on. Riley, maybe you can share this because I'm really scared. I'm going to share the wrong monitor or something.
What tabs you got open, buddy? What you watch? No,
no, I have like 3 screens. So that's the video. The clip starts around.
He's really scared to share the wrong screen.
Around like 3 minutes ish. 3:30.
There's gonna be like cats, like TikTok videos.
I've never used StreamYard, you assholes.
Videos, all this stuff. There's gonna be like Joe Rogan conspiracy theories for like days that he's been watching. All right.
How long is this going to take? Because I can say other things, by the way.
It's like a minute long clip, but
no. But how long is it going to take for Riley to pull this up?
I got it pulled up if we want it, but it's a 7 minute long. Do you know when he says
jump? Yeah, jump to 3:30 ish.
Okay, I'll share it, Riley. I got it.
Yeah,
oh, Riley's already there. Riley's already there. Never mind. You got it.
Yeah, 3:25, 3:30.
You got to share with the audio, Riley. Riley. First of all, you're muted, my guy, and you didn't share the audio.
Wow, I was muted this whole time. I'm so sorry, guys. All right, here we go. Golly, y'all were
just
talking.
ignoring
I'm
you.
going.
200 people goes to like 30.
Skip back a couple of seconds, Riley, so you can actually hear the question from the guy.
Okay, the question starts here. But real quick, can y'all hear this?
No. Did you press share with audio when you shared?
What are your thoughts on the SoFi app experience? Seems clunky at times, not easy to navigate. It's not easy to navigate, and it is clunky at times. I guess as the bear thesis is that it sucks and it's not as good as the competitors. The bull thesis, I guess, would be that we're not really worried about it because our entire app and all of its actual core ledger system is going to be rewritten on Technisis's platform, and that's going to happen on 2023 or 2024, one of those years. So we're just sort of not caring about it.
Okay, Tevis, which is what minute is it? 3:30?
Yeah, just shoot it from there and let's see what he says.
Okay.
Growing strong, and I want to know if there's anything in your earnings results that would indicate trends, maybe that reflect what's going on in the larger economy, something that might surprise us, or just kind of confirm what's going on, the big picture here.
Well, the higher interest rates as a result of the Federal Reserve raising them to try to offset inflation and cool down the economy is driving a refinancing boom for personal loans. People are refinancing out of revolving rate debt into fixed rate term debt. And so that business is definitely benefiting from that trend. The interest rates that we're providing on checking at 2.5% and 3% on savings later this week are a direct result also of higher interest rates. We are passing on the rate increases in our other products, and the deposits that we're getting are allowing us to do that at a lower cost. So there's a lot of complementary elements of our business where one fuels the next. We call that.
So do you basically get the answer as a result of rates being higher and more people are using personal loans for SoFi because they're going out of that revolving debt into a fixed debt. And that's one of the reasons why personal loans is so much higher as a result. Like the higher that the interest rates go, then the higher the personal loans business is going to be. And that's one of the things that, I was really interested to see because personal loans is essentially carrying all the other segments. Student loans is down, home loans is down because of the higher rates as well. And so the higher rates might hurt home loans, but it helps personal loans, and which is good, right? Because personal loans, you have just a higher margin on that as SoFi.
Okay, that makes sense. Riley, I'll share the thing you just put up here. This is for Tannor, right?
Yeah, well, that's just the quarterly earnings deck, so we can go through that if you guys want to.
Okay, Tannor, do you have any other numbers, or do you want to start going through the deck?
Yeah, do you have your own,
I mean, you could scroll down just really quickly, just so people can see. I'll tell you when to stop. You probably have 2 more to go. There, stop there at the financial. Okay. Yeah, there you go. What's really, really surprising here is that for the last 2, or I even think it's 3 quarters for lending products, these have been the fastest growing quarters that we've seen, since we've been around. And it's so much harder. And I mean, even as a percentage basis year over year, by the way, and even quarter over quarter. So it's so much harder to continue a growing pace like that because you're going up against now a higher amount of lending products. I mean, that's, basic math, right? So we continue to pull it out and really, really succeed on our lending product sales. And it's probably because we really front-ended all of our financial services products, which is, the SoFi Money, SoFi Invest, and then we're able to cross-sell them over. Actually, so we could probably close this now. This is also really, really exciting. For the longest time, and I've been a believer of this as well, is that the SoFi Money clients that we have would be of much lower credit score than our actual personal loans or student loans. And it's actually not true. So they just announced that the median FICO score for direct deposit accounts opened in the third quarter was 750. But yet the same thing for personal loans was 746. So one statistic that I went over on my recent video on my YouTube channel was going over the product growths. And the Pagaya loans, which is somewhere where whenever someone has a really low FICO score and maybe we don't want to sign them up because we deal with, high credit score clients, that we will send them to a company called Pagaya and they will find a third party to actually fund that loan. Okay. But the numbers were really, really down for Pagaya. But probably the fact is that we don't need Pagaya right now. Our SoFi Money direct deposit users are at 750 and our personal loans are at 746. We can fund all those people on average. So how interesting is that we don't even need this third-party consultant or someone to fund our loans for us. We can take on that risk because they are good risks to take.
Do we know, Riley, the ranges for, like, what's the lower threshold cutoff for a loan that SoFi might? Do we have a general? Is it like 700 plus, 720 plus?
Yeah, from what I know, it's 7 plus.
That confused me because I remember like my credit score was like at 700 at one point, and SoFi was like, yeah, you can have this credit card. Or I guess this is loans, right? Or we're not talking about
well, even that though, don't confuse an average from our bottom
so
line.
It is okay,
right? Because for every 700 that comes in, there could be an 800 that comes in, and that's how we get the 750. So
wow.
There probably is a threshold, and I think we actually go down to 659 or something on the credit score or on the credit cards, but I don't remember the personal loan one. And once the 10Q comes out, guys, like next week, I will be all charts for you, baby. Like I'm telling you, it's going to be all numbers. So get used to it.
If I had $1 every time Tannor said once the 10Q comes out, I'd own SoFi by now, to be honest. Like, I'd own the whole company.
Dude, I mean, I see so many videos that Amit puts out and he goes, I don't want to do the numbers. Tannor will do it. Tannor probably knows.
I'm not reading the 10Q, bro. I'm not doing
that.
Like,
I'm probably not going to read the 10Q either. Tannor, this is all you, bro.
Yeah. So if the wheel deal and all these guys want to name me the nerd of SoFi, okay, then I have to be who you guys are targeting me to be. And I'm waiting for my numbers. Okay?
Yo, you plan a romantic date on Fridays, and instead of watching a movie, you and your girl just go through
this is what I was going to say. As soon as Tannor started talking about 10Qs, I don't even see your partner anymore in the chat. She just left. She was like, fuck this.
Oh, no, yeah. I knew that wasn't lasting long.
Oh, man. We got to give a shout out to this super chat real quick. Shout out to the Berg. Appreciate you, man. And my man Amid, hustle hard. My brother, outwork all of them. Shout out to the SoFi team. Adam Bergman, I know 194 of you might know him, might not. I would just go to his channel and subscribe for this reason and this reason only. And then you can unsubscribe if you don't like the content. His YouTube channel, 15,000 subs, got hacked. As in, and this is very important for everyone to understand just because of password protection. Some company got in there. It was blah, 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 blah. They changed all of his Google shit. And then they started running a Ukraine fundraiser that's obviously fake on his channel. You know those channels that go live 24/7 and they kind of like mess with your feeds and shit? They started doing that. He talked to YouTube. YouTube can't really help him. They're not doing much. And so he lost 15,000 subs, and we don't know if he's going to get that channel back. So I appreciate you, Adam. I would recommend everyone just checking out his channel.
As a segue, I think I have a really good segue from that topic that you just brought up. YouTube couldn't help him out. Why? Because they're not legally obligated to help him out with fraud. However, when it comes to like banks in the US, they are legally obligated. It's called KYC, know your customer laws. So it's really interesting. This Jack Dorsey is doing this with Web3 supposedly, but banking in the future are also going to be providing identity services. So like like in the future today now, like what's the best thing for your identity? What's the best like type of um, indicator of who your identity is? Is it signing a signature? Because we all know that can be forged, and signatures are kind of outdated, and we're all doing it just because everybody else is doing it. How many kids under the age of 21 has used a fake ID to get into a bar? One thing about banks in the future of fintech is they are going to be providing identity services because nobody can have your money. Like they have to protect your money. And if you're the one that owns your money, that's a pretty good indicator of who you are. So that's one thing that's really hard about building a fintech company today, is that if there is a fraud problem, you're legally obligated to solve it. So they're very well incentivized to solve fraud problems on a large scale. Whereas YouTube doesn't give a crap if somebody hacks your account. That's your fault. You were dumb. But in the future,
and it's social, right? 15K subs to YouTube doesn't mean anything for like me. It's like my life. But unless you're talking 150K or 1 million, YouTube's not going to care, right? They're just
And a good application of this is we're already kind of seeing this. Like, you know how like you go to download an app and you can be like log in with Facebook, log in with Apple, log in with this. It might start shifting in 10 years from now, like to fintech services or a bank where it's just like log in with Sofi. You want to apply for this loan, log in with Sofi, so we can
single sign on
know Sofi's proprietary model immediately, and then they won't have to use the FICO score. They can just immediately use Sofi and give you an offer like immediately. So there's so many cool parallels that I love about this company, and that's one of them.
Yeah, anything to say about that, guys, by the way?
I was going to make an off-color joke about, like, in Canada, the bank is who you have to worry about taking your funds. But we can move on.
In Canada, you guys have some really weird laws when it comes to banking.
Yeah, it's
you guys get free healthcare though, so
that's what they tell you to get you in. It's really oligopolized, and I think that's one of the reasons why, like, for SoFi, it might be really hard for them to break into Canada, because it is just so tightly knit with just the top 3 players or top 4 players. It's not like the US is way more of a perfect competition in terms of telcos, in terms of media organizations, in terms of banks, whereas in Canada, all of those are just like rock solid knit.
Yeah, it's I don't like it very much. Anyway, I wanted to talk about guidance. Do you guys see anything super fun and exciting in these numbers? All right, I'm looking specifically. I'm looking specifically over here in prior guidance and new guidance. Okay, what do you notice? All right, I'll give you guys no seconds. All right, I'll explain. Our prior guidance.
It's a range.
Sorry?
It's a range.
Yeah, it's a range.
Never mind. Just
good observation, Riley.
But very specifically, let's look at the difference in how we increased our guidance from just last quarter, because we also, part of a triple beat, right, is we beat on revenue, we beat on earnings, and we increased guidance. Okay, so very, very exciting. We did that, by the way. But also, prior guidance to new guidance, that went up $9 million. Okay, very exciting. So everyone loves $9 million. But EBITDA, what the amount is that's going to the bottom line, went up $11 million. Okay, so not only are we getting a free $9 million that's going straight to the bottom line, before interest, taxes, depreciation, amortization, whatever, but we are also getting more efficient on our existing amount of revenue already. So this is awesome, guys. I'm like, I can't get off the fact, and I know that there's so many things to talk about with banking in general and total addressable markets, but just this quarter alone is just showing, like, Brad Freeman, bless his soul. This guy, I hope everyone blow him up on Twitter. Get him on this.
We need to get him on here.
Yeah,
stock market nerd. Real quick, Tanner, I got a question. I'm sorry.
Don't talk about it, by the way. If that's what don't talk about I don't want to talk about that.
Stock market nerd?
No, I don't want to talk about an upcoming video if that's what you're talking about.
No, I'm talking about just like, when do you think SoFi is going to be profitable?
I was about to ask this exact same thing. Okay.
When it's going to be
It's like-
profitable?
Yeah, like
Yeah,
when
'cause
they're gonna have a
they-
profitable quarter.
Yeah, what do you think? Next
Whenever
year,
we
right?
want. That's the truth.
It's split into two camps. From what I've been seeing right now, from YouTubers to FinTwit to actual institutions, 2024 and 2023. I'm in the camp where I say like Q3, Q4, 2023, and the whole entire thesis is if we get some type of Fed pivot, we'll see if it happens. If it doesn't happen, but if it happens and student loans are coming back and options, I think 20 or Q3, Q4, especially because I was really encouraged by the trend in the net losses this quarter. We went from over 100 million net losses in Q1 to something like 90 million in Q2 to like 77 million in Q3. I think if that trend continues, we're going to see a profitable quarter by Q3 or Q4. And after everybody answers, I really want to pivot this onto the Goldman Sachs re-rating because I just want to mention that briefly as a conversation topic. But yeah, go ahead, Tanner.
So it's all macro for me. So this is the problem why I don't like to, but it'll probably be a year from now. If I were to take a guess, if everything stays the way it is, I'd probably say Q3 of 2023. That's probably my best bet. But yeah, things can change so quickly. So who knows? What's really, really cool is that SoFi is just sort of determining how fast they want to grow and everything like this. Like one comment that you had made before I get everyone else's perspective is that we seem to only be getting 400,000 new members. But this is kind of by design. This is an exact quote from SoFi. Like people think that we're having slowing growth. It's not true at all. Like this is Anthony Noto's quote from the earnings call. What I'd say is that we're really trying to target high quality members with good compounding growth over years, not over any one quarter. So we're targeting around 400,000 net new members adds per quarter. At some point, that could take a step function up, but right now we're sort of balancing the growth of our member base with quality, as well as making sure that we're building our technology and processes to meet our members' needs while we scale so meaningfully. So, like, this is right now we're and this shows in our amount of expenses for financial services, right? It's continuing to lower and lower. If we wanted to keep up our amount of expenses, we could have seen, 800,000 new members if we did the same amount of spending that we did last year. But it's, not
also,
quite true. We don't even need to.
Just to piggyback on that, one thing I will add, just to put into perspective, because as the company gets bigger, as a percentage of total members, if we grew 400,000 every single quarter, and it looks like a much smaller percentage if we have 10 million versus 1 million. But 400,000, let's just annualize that, just assume no growth, and say 1.6 million a year, right? 400 times 4 quarters. That's more than the total members we had 2 years ago, right? That's more than Q3 2020 total members. So 400,000, it might not seem like so much in the context of 4.7 million members. But you got to keep in mind that 2 years ago, all we had was 1.5 million members. And if we just annualize this quarter's numbers, we would have more total members than we had just 2 years ago. So it is growing very fast. And like, you look at the percentages, but also look at the actual numbers in aggregate. And it's quite rapid growth. And it's been pretty consistent in terms of every single quarter. I mean, for the last, like if you get the median of the last 6 quarters, you're at around 400, 420, something like that.
Right.
And those members are engaged. They're doing deposits.
Yeah. Well, that's the thing though. The banking app that SoFi offers sucks. And like, I can't imagine 6 months from now when they start actually maybe changing this app to where it's super awesome. Like I showed you all that slide earlier, the SoFi Relay Insights, and it's really cool. What they're doing with this is they already have all your data. Now they're trying to show it to you where it's meaningful and you actually get some sort of value out of your bank other than just a high APY. So I'm really looking forward to that. It's going to be really cool. And like, dude, I feel like whenever you actually have an app that actually looks as slick as this, you're going to want to actually share this with your friends more often and actually take a part in those referral rewards. because I when I had the Robinhood app, I never like shared it with my friends. Either they already had it or it just felt cringy. Like, hey, dude, get my referral bonus.
Well, I'd probably take a different stance on this. I think that I think I really like the Robinhood app. I think they probably have the smoothest app in the space, in my opinion. That I once again, I'm still a Canadian, right? But
Yeah.
From what I heard, they're really just trying
My
to
point
optimize.
exactly. I think SoFi's app sucks so much that I wouldn't want to like actually do a referral because it's not well furnished. But if it was like Robinhood, I would be way more inclined. I think, yeah.
Yeah, and two different audiences too, right? Like I forget what that statistic was on Robinhood of like, you know, the median account or the average account, I forget which one it was like $400 in assets under management on a brokerage account at Robinhood, you know. And it's just so much different than the people that actually have you know, their money with SoFi. The average weighted income for personal loan borrowers with SoFi is 160,000 and our student loans is 170,000. Like these are big boys, you know. I don't think they care whether their app, you know, completely flashes red whenever your account, you know, goes down by 1 cent. You know, it's we're just making sure that the processes work fine, the fees are low, and the interest rate that you're making is great.
Can we touch on this analyst re-rating for just a second? It's going to be a super quick topic, but basically, I'm not sure if you guys are caught up with it, but after earnings, analysts generally re-rate stocks because they have more information and then they can plug it into their models. If you can call them models, I'm like super skeptical about half of these analysts because it's just like follow the leader. But Bank of America and Mizuho and Wedbush, they all sort of reiterated buy ratings, and they have Bank of America has a $9 price target, which is I think one of the highest. Mizuho and Wedbush have $8 price targets. And then you have Morgan Stanley and Goldman Sachs. Both of them lowered price targets on this earnings. Goldman lowered the price target from $8.50 to $7.50 for SoFi, which had me asking myself, and I think a lot of people on FinTwit.
They got mad at Noto for that screenshot.
Yeah, exactly. And Noto was like, so somebody commented on Twitter saying like the stock price action is breaking my heart. And then Noto said mine too. Like he responded to it.
Oh, I didn't even see that. Wow.
And so, but interestingly enough, 2 days ago on November 2nd, an article came out on Investor Place, and it was like the top 5 investors betting against SoFi. Guess who was number 2? Goldman Sachs with put options against 6.25 million shares. And I was just like, how is this like a reality where the same institutions that are rating a stock can also trade that same stock? It just opens the door for so much, you know, manipulation and just shady shit to go down.
Because your argument, Tevis, to break it down in layman's terms, is they have options that print money if the stock drops, and then they have massive levels of influence over the financial community because they're a very big institution that can tell the community through media, which is what these analyst reports are, their financial media, that the stock should be lowered because we have whatever reason we have for why the stock should be lowered, which then causes not only algorithms, but people to be like, well, if Goldman says it, we shouldn't buy the stock. We should sell it.
And there's a couple of consequences too. Like it creates this artificial sort of paradigm with regards to small cap stocks. Like SoFi has one of the highest short interests out there of a lot of people shorting, or in other words, betting against the stock, betting for it to go down. And if you have Goldman as an institution who has a long position, in other words, they have shares and their end goal long-term is to accumulate more shares, instead of just, you know, buying in like DCAing like a normal, like one-sided, just only long investor, what they do is they will bet against the stock and then they'll create an environment where the stock goes down, where they're basically recommending that everybody else bet against the stock or sell their shares because it's not a good investment. They'll make money on the way down and then they'll remove their shorts or make a lot of money and then turn those into long. So without proceeds from betting against the stock, when the stock is depressed, they'll just buy way more. And then what will happen is they'll raise their rating again and they'll say, this is a good buy now, and profit on both sides, on the way down and on the way up, which is, it's interesting.
It's funny how they talk.
It's
on
criminal. It's horrible. Those banks. Oh, that drives me crazy. Sorry, go ahead, Tim.
No, I was just gonna say those same people that downgrade the stock, you know, as the earnings call are going on, they have their questions for Anthony Noto and Chris Lapointe. They go, "Hey guys, great quarter. You know, love it, blah, 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 downgrade." Like, get out of here, man. It's so funny.
I think
That's so true.
I found it really interesting that Anthony Noto actually acknowledged the stock price breaking his heart as well. Like when somebody on Twitter respond, because Goldman Sachs was leading the charge, and Goldman was like Anthony Noto's old stomping grounds. He knows exactly what's going on. Like he knows what's going on in that organization.
He was like the top analyst at Goldman Sachs for like 8 years straight. That he knows exactly what that.
He
That's
knows
such
it's
a good
manipulation, and it's ridiculous.
More cheap shares. More cheap shares.
Is there anything more on that? I don't really. I don't know too much.
I wanted to quickly touch on, this is going to be super quick, Robinhood earnings. I want to show you guys one stat and get your take on this. So total net revenues increased 14%, and there's transaction-based revenues. This is the big deal. It actually increased, right? Options increased 10%, cryptocurrencies decreased, and then equities increased 7%, meaning people were trading, and Robinhood was able to make some payment for order flow. MAUs decreased by about 1.8 million, though. Any thoughts on Robinhood actually getting people to trade on the app, even in this economy?
So just one question, clarifying question for that. When we're talking about transactional revenue for Robinhood, we're not talking about directional, right? Like we're not talking about there was more buying versus there was more selling. All of it counts as a transaction, right? So it could have been a lot of people just shorting, buying put options, whatever, like being negative on the market, but they're still doing more of it, right? Is that
right? That's a good point. Yeah, that's a good
Do you
point.
want to, as
Riley, you're muted, bro.
Yeah, I'm so sorry. I want to share something real quick. It's going to be really quick. So when we talk about Robinhood and then SoFi, this is in the code right now for options. It's going to be released, but you can see like the type of verbiage that SoFi is offering on the bottom picture. Know your limits at the very bottom. Like they're really like focused on like, you know, like what let's make sure that we're doing the right thing for you and that you're actually making smart decisions instead of just encouraging you to trade a bunch and make a lot of money for SoFi. So I just wanted to like point that out. Like SoFi is going to be on the right side of a lot of these issues whenever we come down to like regulation 5-6 years into the future, while Robinhood is just going to be incentivizing bad behavior.
Yeah, no confetti coming down on your screen when you're just YOLOing into AMC.
That's a good point. That is a really funny point.
It definitely attracts a younger retail investor. Like, you know.
Well, they asked me the other day, "Hey, do you want margin?" And I said no. I was like, I don't want But yeah, the fact that people were still, even if that's a good point, Tevis, even if they were being negative against the market, there was activity in the retail sector. So I guess it was decent for Robinhood.
Could you could you bring up Robinhood's presentation and then just go to their average revenue per user? And I'm just going to set up something before as you bring that up. Just because you saw how much transaction-based revenue was from options, it's over 50% for Robinhood. Okay. On their presentation, the other one, not the
actual deck.
I mean, that works too. That works too. Sorry. It doesn't need to be too colorful. Increase to $63. Perfect. Do you guys know what the average revenue per user is for SoFi? Let's talk about it.
I don't.
I actually need to find it here. Give me 1 second.
I would guess it's 35-ish.
Any other guesses?
Are we talking about just FinServ, like financial services, or
financial services?
No idea.
Average revenue per user.
35. I'm locking that in.
Okay. You're good.
I'm gonna be 20 or something.
Think about it this way: Robinhood made around over 50% of their earnings from options. So remove options. That's pretty much what SoFi's average revenue per user is. So let me bring this up here. Average revenue per user is at where is it here? $33 per person on their FinServ side, or financial services. So that's SoFi Money, SoFi Invest, credit card business. All of the things Sorry,
I was like, why would you buy Robinhood? It's just so crazy to me.
because they're doing
That's-
half of the ARPU without the option.
That's crazy. That's crazy.
So
That's a good,
and they don't have a loan there. They don't really have a great lending section or making any sort of money on that either. And we have all these other segments. The only thing we don't have is 20 million users, right? And that is a big difference. But let's just talk for a sec. Average revenue per user quarter over quarter is up 46% for SoFi. Is it up 46% for Robinhood? Is this industry wide? No, this is a SoFi exclusive. Okay. This is most likely due, and just my personal opinion, is due to spending increases, okay, through credit cards, through debit, everything like this. But it's also through a wide range of new products as well, like things like margin is being used potentially even more right now. But if we start to introduce options, this could double our average revenue per user for SoFi. And what I think is really interesting is if SoFi's whole motive is best in breed products, there is a lot of room of margin or what am I trying to say? Like their earnings compression to bring down the cost of options contracts and actually bring people over from Robinhood. I'd rather be, delaying how quickly we actually go profitable before, or like focus on actually getting the members over. Now, I know that's not really hot in this specific market because people want earnings. And that's why SoFi is actually going towards it. They're trying to feed institutional buyers, want for profitability right now. It seems to be the hot thing in investing. But still, if we want to be a long-term player for a decade or two to come, we got to make best in breed products that are actually going to take people off of Robinhood's platform.
Yeah, and I think
Tevis.
Riley and Amit sort of nailed it. We live in this world where this would actually be an interesting thing to test, like a social test. So maybe if somebody on the SoFi team is watching, or I'll clip this and send it to Anthony Noto on Twitter. But it seems to me that I understand the strategy of SoFi building all the back end before they pretty up the front end. But it seems to me that from a user perspective, the front end or that easy user experience is just as, or maybe even more important than SoFi actually having all of the features. Because if so, then SoFi could have feature parity with Robinhood, or like a one-to-one thing, or they could even have more features in Robinhood and people would still use Robinhood because it's so much easier to use and so much more user-friendly. In which case, in the short term, purely, it would hurt SoFi that they're working on all the infrastructure on introducing new features, like introducing options trading, for example, versus them making the app less laggy or them making it actually more usable and easy to use. If that holds true, which I think anecdotally speaking, it really does, because I want to have an app that's easy to use. I might be tech savvy, but then somebody else might not be tech savvy. And so it's just a blanket thing that you want to have for your apps. And so this approach of like building the features first and then making it pretty might have short-term consequences or repercussions. And then doing it the other way around, it might give you another response in terms of the actual users. What do you guys think about that?
I think 100%. And I think SoFi has always taken this really hard route of doing the things that don't necessarily pay off the strongest in the short term, but are the best for the company in the long term. How many of SoFi's competitors and everything like this actually have a bank charter? And the profitability of a bank charter is huge. So why aren't they doing it? Because it's extremely, extremely difficult. You need 50 different fully licensed states all across America with all your brokerage license fees and everything along these lines. And then you need to start working with the OCC, the Fed, and the SEC to actually get this bank license, which took us like a year and a half. It's a very expensive process, but it was the right thing to do. And then also Galileo, this was someone that we actually wanted their processes from. We could have just bought their service. Okay. We bought the whole company. Technesis, we wanted their cloud-based service. We bought the whole company. Was it the easy thing to do? No, it was the right thing to do. So this is what I think is so cool. And it's also with going after these super high FICO score clients. It's so easy to go after the clients that Robinhood's going after. Okay. Little, sign up $10, get all your friends, get everyone, everything like this, right? Just spread it like wildfire. Okay. Happy confetti, everything like this. SoFi is taking an approach where our CAC, our customer acquisition costs, are actually much higher. I'd love to touch on this later if we actually have more time. But obviously I want to let you guys speak before this, but we're going after such higher clients that is worth the potentially bigger risks, but way bigger rewards. I wonder what you guys think about that as well.
I agree. You sounded like a motivational speaker when you said it's the right thing to do. You know, even if it's
I believe it. It's
super
true.
Bezos, like it sounds just like Bezos when he was talking about the AWS, or the actual AWS. Like
100%.
it's just the whole fintech market is growing, and we know for a fact regulation is going to change, and all these businesses, all these big banks are not prepared. There's like a tsunami coming, and a lot of fintechs and all these businesses are the ones that are going to be able to adapt and change are the ones that are going to have the lowest operating costs. Like Tannor said, they're just focusing on making that super small by owning everything underneath the sun, and just scaling up that way. I think that's super interesting. But I want to like talk about SoFi Pay in 4, because Anthony Noto said something pretty interesting on the call, and that is going to be the first product that Galileo and Technisys actually work together to build, which is huge because like we've been focusing on this for quite some time. If you can,
I don't know if
there you go.
I don't know if they came together to build the product. I think it's offered by both services.
Okay. Well,
offered by both services.
They did collaborate together though on this because of this picture right here. Because there's certain distribution models when it comes to buy now pay later that some like companies stick into. SoFi wants to capture it all. So the idea is SoFi is going to be able to offer their own. They're going to be able to offer buy now pay later to other businesses. But a lot of these companies are all in these little silos of like we offer buy now pay later for like insurances or like medical like companies or just like direct to consumer and stuff like that, or merchant suppliers. But SoFi is going to build the infrastructure so that like any of these businesses and any of these models can like come and test their product out, which I think is going to be really cool.
So probably what's going to happen from this is two things, right? Like number one, we're going to get a SoFi branded buy now pay later product, and number two, we're going to get Galileo infrastructure backing for a B2B offering for buy now pay later for other businesses to do it through SoFi, powered by SoFi.
Right. So wouldn't that fall under the two categories of credit card issuer and white label provider?
I'm not sure. It's just this is going to be like the new era of SoFi. Like as soon as they release this is going to be a different era because this is I think like what does SoFi sell to businesses right now? Like other than Galileo's and Technisys products that aren't like under the SoFi name. I don't think we do that many products under the SoFi name other than like SoFi at work. No, that doesn't count. But this is going to be like SoFi branded, and this is going to be like one of their many products that's going to be under their umbrella in 10 years from now.
So
and they're going to start. Yeah, go ahead.
I have thoughts on this, man, because it really depends on whether you're bullish or bearish on buy now pay later as a whole. Like if SoFi wants to provide it B2B through Galileo to somebody else, then that's one thing. That's definitely fine. But if SoFi wants to brand the SoFi branded buy now pay later, like then we're going to go into this conversation of like, what is a firm doing in terms of their revenue, in terms of their users? How much cash are they burning? Like buy now pay later had this entire wave in 2021 with Afterpay, Klarna, Affirm, all of these sorts of companies rushing to do it. And right now we're seeing like consumer credit is like all-time highs. Like people have high debts. They have low savings as a result of what's going on in the macro. And just buy now pay later, the only saving grace that I see for SoFi that's a positive for buy now pay later is the 750 FICO score. Like their consumers are really financially secure, or they're financially responsible. Let's put it like that. But just buy now pay later as an offering in itself, I think was one of those things where like it had a huge boom. But right now we're in a part of the macro that does not really support buy now pay later. It's not very friendly to a buy now pay later service because of that racking up consumer debt.
Yeah, I think that's the short term, but I think in the long term, buy now pay later isn't going to die. I think it's going to be something that people are going to use in 20 years in the future. That's my opinion.
Also,
I
it's just
I
a
know
small part of SoFi. Like a firm's entire business is buy now, pay later. Like this is just
But
Yeah,
they're
but
very
it's
different though.
it's the first. It's the first collaborative like piece of technology that's going to be sold under the SoFi umbrella. And like from what we know from the actual, not the Q3 discussion, but the right before that, Anthony Noda had some sort of discussion about it, and he was talking about how many partners that they're talking to, and apparently it's a lot. Like I really think next quarter we're actually going to see a lot of like new unique partnerships about this kind of stuff.
I know you guys have seen in my some of the chats that I've had in our little group chats or whatever. I'm pretty bearish on this buy now pay later. Not a big fan at all, because I like buy now pay later. Okay, but let's make sure we're both understanding the offering that a firm is offering is 100% different than the offering that SoFi is offering. Okay, a firm can make money. SoFi cannot make money. So there's a big difference there. Sorry.
B2B or B2C?
Well, B2C as a SoFi product.
Yeah. Well, I don't know. Maybe in the long term, won't we have enough data to beat the FICO score? And
I've seen buy now, pay later being done in two ways. Either you have really good credit and you get a zero interest breakdown over 1 or over 2 years, and that's one way. Or you have bad credit, in which case it's the same interest rate as it would be for a credit card for a buy now, pay later. Like if you're trying to do buy now, pay later and you have bad credit and you look at the fine print, you're getting screwed just as the same as you would be with a credit card. So is that sort of what you're talking about, Tannor?
Yeah. So the difference is that a firm can make money two different ways. If you partner with a firm right now yourself as the customer and you go there, they will say, hey, pay it in, and not just pay it in 4, pay it in whatever increment that you want. Okay. And this will be the set interest rate that we're offering. And our offer to you is that you probably don't even have a credit card because you're an underserved client or something along these lines. But this is the rate that you will know and we will not change it. Okay. Whereas a firm will also sell to merchants like Peloton, for example, saying to the customer it's 0%, but to the actual business it's 14%. And so Peloton is actually paying up that 14% for you. But SoFi is not offering either of those. They're saying if you come and use the SoFi pay in 4, it's 0%. Okay. Yeah. Where's the money in that? And I don't care if you have a 900 credit score, there's still a risk that you default. And
the money is where people see SoFi and they're like, holy crap, this company is actually a lot better than the bank that I'm at right now. And then they're going to get more users.
Regardless.
Yeah, but Riley, I think the barriers to, and like, I think the switching costs are so low for people that really, like, if I'm trying to check out with a big ticket item, I don't really care who's offering me buy now, pay later. There's like 7 buttons of like pay with Apple, pay with Amazon, pay with Klarna, pay with Afterpay, pay with, a firm, pay with SoFi. I don't care. There's no brand loyalty there because it's so easy in terms of a switching cost perspective. So to Tanner's point, for them to actually make it financially responsible, they have to get a cut from the actual business to offer the 0%.
I don't see. I'm looking in the future. Like
here's where we do.
I think they're being. Hold on, I just want to finish this thought. I'll throw it back to you. Like, I think SoFi is leading not based on unit economics, but like what is the best decision for the consumer, which is what Amazon did, and this is like what Tesla did, and it's just like focusing right. I get it; it's not going to be like profitable, but in the long term, SoFi is going to have a lot of data. They're going to be able to provide these. These are like point of sale loans. Like, imagine you're going to like the store and you don't have enough money to like buy this thing. And then SoFi is like, you know what? I see your direct deposits. I know how much money you're making. I know like your assets, you're tracking your car, you're tracking your mortgage and all that stuff. I know that you can afford this. We're going to give it to you. And we know that you're going to stick with us in the long term. If we make this awesome relationship right now where you can buy this item for work and you don't have to pay an upfront cost, we're going to have your back here. And then they're going to be with us for a longer time. That's my idea. And I think in the future, like it's going to pay dividends, but I understand your point. Go ahead.
I see a comment in chat. I just want to correct it really quick, just because I was reading about this today. So it says the SoFi Stadium, the cost per year is 1.5 times just a regular Super Bowl ad. I think last year's Super Bowl ads were like $5.6 million per 30-second plug. We pay about $33 million annual cost for our stadium. So it's more than that, probably around 12 Super Bowl ads. But regardless,
aren't they renegotiating?
They are trying to renegotiate because we paid during COVID and we didn't really get anything from it. But just really quickly there is a cost that we could get for SoFi Pay in 4, and that would be interchange fees, right? If you're tapping these cards, if you're paying with this thing, we will get interchange fees. Now, what are the products that people are using for Pay in 4 rather than a regular credit card or debit card? Large purchases, okay? But in SoFi's current business model, we take a fixed cost anyways. So what's even the benefit of people buying something like a $3,000 really hyped up computer on Pay in 4 if we're going to take the same cost regardless? It's right now is not as clear, and I hoped that Anthony Noto has spoken about it on the call. But I think it's a get your money right sort of thing. And as a shareholder, I'm just not too interested.
So Tannor, maybe you can tackle Roberto's question there, asking, what makes you think that the merchant is not going to pay anything on buy now, pay later? Because a lot of these,
SoFi.
It doesn't matter though. Like a lot of these other, like Affirm, for example, and I know you said it's different, but a lot of the buy now, pay later services, they take a cut from the merchant. That's their entire business model of buy now, pay later. That's how they can offer the 0% APRs. So regardless of the partnership, I mean, in order for this to be a feasible launch or to profitability, they would have to take a cut from either the user or the merchant, right? So
yeah, well, the Affirm has like something like tens of thousands of partnerships with every company that they have that affiliate with. We're not just walking into a store, tapping an Affirm card and just taking it out of the merchant's pockets, right? There is an agreement that these companies make with Visa, with MasterCard, and Amex. Sometimes I go to certain places, they don't take Amex because they charge too much. But those are agreements that they're making. So they would have to have this agreement with either Amex or I actually think it's MasterCard that's offering us the Pay in 4 solution, but that's really, being offered to us as an extension of a regular card. I don't see the interchange fees being any higher, but the risk is much, much higher.
Is there any possibility of like a synergy between Galileo and buy now, pay later? Like in terms of Galileo has this entire infrastructure in terms of the actual payment processing infrastructure, and then they also have a partner network. Could that be one of the ways that SoFi is thinking about offering buy now, pay later, like with Galileo as like a Rails essentially, or
100%? Yeah. As a B2B partnership, it might be completely different. They might charge Chime and Robinhood an extra fee on top of that, or even, have them deal with the risk, right? But so that's a completely different side of it. I'm just speaking about SoFi's own bank taking on that as being the first customer of Galileo. Why? We're doing so well. Why can't we just relax and grow?
Well, what about like instead of like if you have SoFi Plus, you can get that interest-free Pay in 4s, but if you don't, you have like you can do the Pay in 4s, but there is like some like sort of interest because like if you're making a direct deposit, that they're gonna like be able to pay for it pretty easily.
Yeah, and I would love an interest rate. It's just from their agreement. They say they're taking 0% interest rates.
And it doesn't make sense for them to charge an interest rate because everybody on the user side is such high FICO scores that they can get 0% APR at any other buy now, pay later service. So why would they pay an interest for SoFi? Look, I know we're almost at 11, so we should just wrap this up. I know
it's a good debate. It's a good debate.
Yeah. I don't know if anybody has last words. I think all of our links are in the description of this video. So definitely check us out.
Yeah, that's my last comment. Future investing.
We'll continue this debate next week. Where there's more to break down on earnings. So we'll talk more about that and we'll see what we can do. Tanner will get his 10Q. So he will have a romantic dinner date with his wife and read the 10Q. And we'll go from there. All right, everybody.
Thank you for changing your name.
Yes. We'll see you guys next time. Bye-bye.
Bye.
Thanks, everybody. See ya.